Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update. For this month, we're going to take a look back at the first couple months of the year and share some thoughts on events to watch in the near future. During February of 2016, the market was down more than 10% and ended the month down 5.5% from where we ended 2015. Investors were concerned about slower global growth, slumping oil prices, and deteriorating U.S. economic data. Economic indicators on our dashboard were showing weakness, causing us to remain cautious about the economic environment ahead. Fear was seen across the board, with many market participants worried about a substantial market crash. The overly negative sentiment served as a contrarian indicator, and that, in hindsight, we can now see that the sell-off was overdone. The rest of 2016 picked up as we saw the economy improve, oil prices stabilize, and the markets move higher, with the S&P 500 ending the year up about 12%. The start to 2017 has been much smoother after a roller coaster ride of a year. Now, 2 months into 2017, the S&P 500 is up 5.5% with very little volatility. According to LPL Research, at the end of February, we had gone 50 straight days without a 1% move up or down. The previous record was 34 days, set in 1995. In the midst of this quiet market, we have seen all major indices move higher on renewed optimism for economic growth, higher inflation, and strong economic data. While sentiment remains high, we're watching several factors that could impact the market and potentially end this period of low volatility. Looking forward to the month of March, there are several events on the calendar that could be market moving, including the second Fed meeting of the year. Since the last Fed meeting, Fed officials had expressed a desire to raise interest rates sooner rather than later, as the Fed's meeting minutes stated a rate increase could be appropriate fairly soon. In the past few weeks, the likelihood of a March rate hike has increased, with even higher odds in May and June. The hawkish tone of the Fed comes following strong economic data, employment, and inflation projections. While fundamental economic data continues to be robust, we're still left with uncertainty surrounding what many of President Trump's policies will look like. As we move forward this year, we'll be watching these items closely to see how they impact markets and be ready to reposition our portfolios accordingly. We'll also be closely watching events across the pond in March as the UK's House of Lords debate Brexit, which is followed closely by a European Council meeting where the UK may formally announce its intention to withdraw from the EU. Dutch elections also take place in March and are the first of a number of European elections this year that have the potential to lead to further division within the EU. With the strength in economic data and renewed optimism in the economy, we feel there is a low chance of recession in the next 6 to 12 months. However, with many possibilities for unknowns throughout the year, we're prepared to monitor and make changes to the portfolio as major events unfold and the economic environment evolves. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We'd also like to remind you to follow us on Twitter and like us on Facebook.